Welcome to the MTA Podcast Series, a weekly audio cast featuring interviews with recognized industry professionals. And your host, Ed Carlson.
Tuesday, February 2nd, 2010. We are more and more convinced that this is more than a mere correction, and that this might be a very severe bear market. To that end, the reversals are ominous indeed. Hatches should be battened, doors locked, children taken below decks, profits, where they still exist, taken. Today's guest is Dennis Gartman. Mr. Gartman has been directly involved in the capital markets since 1974. He was an economist for Cotton Inc. in the early 1970s. At NCN Bank in Charlotte, he traded foreign exchange and money market instruments. In the late 70s, Mr. Gartman became the chief financial futures analyst for A.G. Becker & Company in Chicago and was an independent member of the Chicago Board of Trade until 1984, trading in Treasury bond, Treasury note, and Ginnie Mae futures contracts. In 1984, Mr. Gartman ran the futures brokerage operation for the Sovereign Bank, and in 87, he began producing the Gartman letter on a full-time basis. Clients of the Gartman letter include many of the leading banks, broking firms, mutual funds, hedge funds, energy trading companies, and grain trading companies. Mr. Gartman served a 2-year term as an outside director of the Kansas City Board of Trade and appears on CNBC and Bloomberg Television. Dennis Gartman, welcome to the program.
Well, it looks like you're scraping the bottom of the barrel, but here I am, and thanks for having me on.
No, not at all. We're really thrilled, and I know we're going to have very high attendance at our podcast page over the next few days. That's quite a bio you have there. I normally ask guests to tell us what they were doing prior to their time in the markets, but it sounds like you may have been born on the floor of the Chicago Mercantile. What else did you add?
It's rather interesting. It's a long and circuitous and great route. I came out of grad school in Raleigh, North Carolina, my beloved NC State, years and years ago, back in the early 70s. Went to work at Cotton Incorporated. Cotton keeps America feeling comfortable.
There you go.
My job, and it does. And my job there was to understand how the cotton futures market functions, who uses it, why they use it, what hedgers do with it, how do farmers and producers hedge with it, how do the millers use it, how do the cotton gins use it, forward pricing. And it was fascinating to me because this was getting close to the beginning of the advent of financial instrument futures, and watching how everybody had traded in cotton. I wrote a couple of articles many, many years ago that showed up in a number of places explaining how people were going to use this new thing called financial instrument futures, that banks were going to be able to make loans 5 years forward that would be floating, that could put a cap on a loan, could put a base underneath a loan. They would be able to take variable rate loans and turn them into synthetically fixed rate loans. They'd be able to take fixed rate loans and turn them into synthetically variable rate loans. They'd be able to have all sorts of new products. And I said, now just wait 1 minute. Please understand that we've been doing all of these things in the cotton market for 100 years. The sophistication that existed in the cotton futures market, even back in the 19th century, was really quite extraordinary. And I was fortunate enough to take what I learned in cotton, went to NCNB, which is now Bank of America, but back then was a powerful little bank in Charlotte. Took what I learned in the futures market, went over there, did some work for the bank, traded foreign exchange, which was a wonderful thing to do, and then finally decided to move to Chicago and test my mettle on the floor of the Board of Trade. Did a tour of duty, as I like to say, there for 7 years. Got rich 3 times, got literally broke 2.5 times. Learned a lot about myself in the process, and by that time, I'm now 35 years old and far too old to be in the bond pit, and said, you know what? Maybe I should take the wisdom, hopefully, that I had garnered in the previous 15 years or so, and I began just trading for my own account and writing the Gartman letter. And lo and behold, here it is, 2010, and I'm still doing exactly that. I'm the luckiest person I know. People actually pay me for my modicum of wisdom that I'm able to impart on a daily basis, and I've been very fortunate. It's been a great ride.
Wisdom and experience, it sounds like. Well, that is a good introduction. You were right. That was interesting to listen to. Okay, so that brings us up to present times. Tell us, what does a typical day look like for Dennis Gartman?
It's a long day. I awaken usually at 1:15 in the morning.
Oh!
More often than not, I get up before then. Fortunately, my office is in the house. We have a wing here that I go downstairs, and I am writing the Gartman letter by 1:30, cleaned up and ready to go, and I'm writing violently, is probably the only term that one can use, until 4:45 or so. Write 7 or 8 pages on the capital markets. What's going on in the foreign exchange market? What's going on in the debt market? What's going on in equities? What's going on in energy? What are the major political movements that I find interesting? And then trying to ascertain, are there any trades that can evolve or devolve out of that analysis? I've been doing it every day for a long period of time. By the time I get the newsletter done and out on email at between 5 and 5:15, it's time to start thinking about the ETF that I run up in Canada and the hedge fund that I manage. The rest of the day is spent trading the hedge fund and the ETF, gaining information for tomorrow's newsletter, answering myriad phone calls. I probably get, and this is not an exaggeration, 300 emails a day,
Wow.
Many of which are sending me information, which is very nice, because as the newsletter has gotten larger dissemination, the folks at Shell or Conoco or the people at Barrick will tell me things about the gold market, or folks at UBS will give me information on what's going on in the foreign exchange market. And that's the nicest thing, is that people I've found are so nice that they send me information, and more importantly, they tell me when I'm wrong. And I guess one of the things that we all learn is, even here at 60 years old, I still get things wrong. And the important thing is to admit it, move on, change your trade, and come back and fight for another day. So my day usually ends about 9 o'clock at night. Unfortunately, I only get about 3 hours sleep, and that's all I need.
That's amazing.
Well, as my daughters say, Dad needs only 3 hours sleep because he needs to work 5 hours more than everybody else. With a 65 IQ, that extra 5 hours of work just gets him back to parity.
Oh, goodness. Dennis, over the years, you've spilled a lot of ink writing about declining populations in the Western world. I find these aspects of your letter terribly interesting, and it really adds something to the reading experience. But, bottom line, is there a relationship between that and what we should be doing, or at least thinking about with our investments?
Well, I actually think there is. I think demographics drives everything. And one of the countries that I point to specifically, and I think one of the reasons why Japan has been in a protracted bear market, literally a 20-year bear market now, is the demographics in Japan are, I hate to say this, fatal. Japan is not replicating itself. The Japanese women have simply dropped out of the marriage pool. They have dropped out of the birthing pool. They, for all intents and purposes, have refused to marry Japanese men. And Japan, even by its own government's acknowledgement, is going to see its population fall in half by 2050. That is an astonishing thing to consider, that your population will fall by half in another 40 years. The problem for the West is that Japan may just be a leader in this circumstance. Italy is no longer replicating itself. Germany is no longer replicating itself. France is no longer replicating itself. The UK is not replicating itself. The West is not creating enough births to keep economic activity advancing forward, and that I find disconcerting. Here in North America, Canada, and the United States, we are barely replicating ourselves, and were it not for in-migration, we'd have net losses of population, and that's not a good thing. Despite what the Malthusians tell us, we can feed ourselves very readily, but we're not populating ourselves, and I find that disconcerting, and I find it hard to make bullish arguments, especially for Japan, in that sort of environment.
We're going to continue with Dennis Gartman in a moment, but first, a reminder that on next week's program, we'll have Chris Verone of Strategas Partners. Dennis, this kind of puts my notes out of order a bit, but I want to follow up on this Japan idea, at least for one more moment. as you wrote in your newsletter today or yesterday, Japan is still higher on the year. The equity markets are still higher, whereas the rest of the market is down for the year. Seems to me to be just one observation that goes to my question. Is the Nikkei in general and Japan an outlier to the rest of the world's markets these days?
Well, they had been for 20 years an outlier as they went down. And to be honest, this may be somewhat contradictory to what I just said, but for at least the next several weeks, I hope, in our funds, we're actually putting on long positions in the Nikkei and at the same time selling the Japanese yen short. And for the first several days that we put the trade on, it has been working. Japan seems to be a bit of an outlier at this point, where the other Western markets were all collapsing last week. Japan was holding on quite well. That's interesting. It's worthy of note, and the first thing that good traders do is they listen to things or watch things that are outliers, that do seem, that do stand out by themselves, and it's worthy of paying attention to.
From Nigerian oil to Japanese politics, the depth and breadth of what you write about in your letter, it's really amazing. Recently you wrote, quote, "As our long-standing clients know, we have followed Mr. Ozawa's career over the past 30 years, end quote. How is it you came to follow a Japanese politician's career, and how do you do such things?
Well, you have to follow. Well, first of all, I just do follow those things. I think they're interesting. I think you need to understand the political circumstances that prevail around the world, and Mr. Ozawa has been a fellow to pay attention to, because he's moved from the Liberal Democrats over to his own party at one time. It looked like even when he was still one of the high-ranking members of the LDP that he was on track to be prime minister. He learned his trade at the feet of some of the real brilliant politicians of Japan. Shin Kanemaru is one who comes to mind very quickly. And then when he knew that he was in trouble this past year, as he's gone to the Democratic Party of Japan, he was the leader there for a while. It looked like he was going to become the next prime minister in that party. Then he ran into political problems with some corruption charges against some of his people within his campaign staff, and so he had to stand down, but here he is still the power behind the throne with the new Hatayama government that exists there. So you need to know, you have to have a program to tell who the characters are, who the players are, and Ozawa is just one of these guys that over the last 30 years, it's just been fun to watch as he's moved up and down. You learn a lesson from Ozawa that you don't ever count yourself out. Gather your marbles back together, see whether you've got some good marbles left, and go in and find another marble game that you can go play in. And I think that's a lesson for everybody to learn.
There you go. Absolutely. All right, then, let's move on. In a market like we live in today, which is global, it seems like the opportunities are just endless. However, it also sometimes seems that finding an asset and correctly determining its future direction is sometimes just the beginning. I mean, implementing an opinion can be a challenge as well. Some months ago, you shared with your readers a problem that you had trying to trade an opinion on the Shanghai index, or maybe it's just China in general, using the popular ETF FXI. Would you mind sharing with our listeners what happened?
Well, what bothered me was how often it would gap down, gap up, gap down, and then I found out that what you really have involved, and they may have changed the composite of that index since then, but there were all sorts of exigencies involved. Are we trading H shares? Are we trading G shares? Are we trading I shares? Are we trading A shares? Are they the shares traded in Shanghai? Are they the shares traded in Shenzhen? And finally, I just threw up my hands and said, look, I hope, I pray, I bet there will be a better ETF than FXI, but I just tossed it overboard and said, even I can't keep up with this, and I gave up. There are times when you just learn that there are more things going on in this world, Horatio, than you and I are aware of.
Yeah.
And Hamlet-like, I took to the sidelines.
It was a few months ago that we got a great sign of a pending bottom in the dollar when the world's village idiot Hugo Chavez did a bond offering in dollars, effectively shorting the greenback at the bottom. I know you're bullish on the buck short term, but what are your thoughts a year or two or even 3 years out?
Well, I think, first of all, let's see, this is Tuesday, February the Tooth, Groundhog Day. What a great movie. And
yes, I agree.
If we, quite honestly, I think if I have a position on until Wednesday, February 3rd, I should get long-term capital gains on it. But that's not going to happen. So the farthest that I can probably look out with any sense of rationality is 3 months, 6 months. And I honestly think that 3 months, 6 months from now, the dollar will probably be demonstrably stronger relative to the euro. I think the euro has real problems. I think the EU itself is under strain. As I've said, I think the cloth that has been woven to create the European Union is tattering at the edges, and I think it's only a matter of time until it comes apart. So I think that the euro is itself under real extreme pressure. Not so much that the dollar is better, but that the euro has got problems. On the other hand, I think the dollar relative to the Canadian dollar, the U.S. dollar relative to the Aussie, the U.S. dollar relative to the Kiwi, could be demonstrably lower than where it stands right now. Because I think that those countries are politically solid. They have the stuff that the world wants. I mean, Australia and Canada have water, they've got grain, they've got natural gas, they've got crude oil, they got uranium, they got gold, they got copper, they have all of the things that the world needs. And they are also free traders, and in the case of Australia, they stand right there at the back door of the great demander of all of these things, China. Mm-hmm. So the question is, where do I think the dollar index will be 6 months from now? Probably not much change than where it is. Where do I think the euro will be? Demonstrably lower. Where do I think the other dollars will be? Demonstrably higher.
Mm-hmm, mm-hmm. You know, Dennis, when I hear you on television, say CNBC's Fast Money or some other...
They'll let anybody on, won't they?
Or any other program, or read your letter. You know, I usually I'm sitting there nodding my head in agreement, and today's interview hasn't changed my mind about that. But there is one thing that you keep coming back to that leaves me a little uneasy, and frankly, I think a lot of technicians would feel uneasy with this comment. And I'm just going to give you an opportunity to kind of to explain it a little bit more. You've been saying for months that the recession is over. Why don't you explain your thinking on that? And are you ruling out a double dip? And if the recession is over, does that necessarily mean that growth is back?
No. The growth and end of recessions can be mutually exclusive. Let's say, yes, I stand by the statement that the recession ended, and I believe it ended in August, September of last year, and when the National Bureau of Economic Research, when they sit down, call their meeting together, have their third martini, and say, okay, when did it end? I think they'll look back and say it ended sometime in the late summer, the early autumn of last year. A lot of indices made their lows. A lot of the economic data points that I have looked at for many years, for 30 years, turned higher and better. Now, we have to first understand, my wife says, Dennis, you keep telling me the recession's over. How come it doesn't feel good? Well, let's understand the recession ends at the absolute worst period of time. By definition, when you have made your low, that's the bottom, and it feels very bad when that occurs. How long does it take for people to begin to feel better? Oh, it takes 6 months to a year, easily. And we forget that fact. We forget that in the recession of 72 to 74, people didn't know. The recession ended late in 74. No one felt good about life until 76.
So it's a technical marker more than anything else.
Yeah, absolutely. And the National Bureau of Economic Research will come back. Remember, they made the statement. They didn't meet and tell us we were in recession, which they said began in November of 2007. They didn't tell us that until February of 2009. Okay? Mm-hmm. That we forget that fact. They won't tell us that we came out of recession. They probably won't even meet until sometime this summer, and then they'll say, oh, it ended last year. And if historically they do it right, they're usually 15 to 16 months late before they say there's when the recession ended. Well, isn't that a nice job to be able to have the benefit of hindsight that everybody forgets?
Right. Dennis,
I want that job.
You want that job. In the minute we've got left, in literally a minute, we can't have an MTA podcast without at least touching on technical analysis. In your letter, you often refer to several basic geometric patterns, such as head and shoulders or triangles, or I see this morning you were talking about the box, which for people that don't know, it's the Fibonacci area between 50% and 61.8% retracement. And then, of course, my favorite, the fat crayon, or the big, thick trend line. How did you come to use technical analysis? And frankly, how did you get to the point you got to and then stopped? Or are you continuing to study it?
Well, first of all, I learned it years and years and years ago. Actually, I learned it back at Cotton Incorporated when we were taught to use only strict fundamentals, and people kept getting things wrong. Mm-hmm. There had to be some way to take a look at the data that was compiled, and I actually was a believer early on that the market, being the sum total of the wisdom and even the stupidity of everybody who's involved, when people are betting their money, they're usually trying to make as cogent a bet as possible. It just made sense to me to use technical analysis. I then said, you know what? I'm going to try to understand 2 or 3 or 4 economic fundamentals that make sense to me, and then I want to make sure that the chart is telling me exactly the same thing. And when I started to understand that, it took me till I was about 35 or 40 before I began to understand the simplicity of that notion. Things got clearer. What I have learned is that the simpler one keeps one's technical analysis, I think the better one is. The great names, my old friend Paul Tudor Jones is really a very simple technician. Rich Dennis is really a very simple technician. The great minds are very simple. They use trend lines, very simple ones with, as you just said, a fat crayon. I tend to draw mine with magic markers. Okay. I think that helps because trend lines shouldn't be that close. You shouldn't be able to draw them with a pencil. I mean, that gets to be silly. But you want to watch big moves and big trends. And am I a believer in Fibonacci? Not all that much, but I have seen markets retrace 50 to 62% more times than not. I have seen markets move in 5-wave patterns more times than not. I've seen charts derive triangles as consolidations and pennants as consolidations more often than not. And I understand that they're not perfect, but they help. So am I a believer in technical analysis? You bet I am. If you ask me which way do I favor, I'm probably 51% an economist and 49% a technician, but as each year goes by, those numbers are getting closer and closer.
Mm-hmm, mm-hmm. Well, that's a real good way to leave it today. You know, Dennis Gartman, it's been a real honor having you with us today. Is there anything else you'd like to mention before we go?
Yeah, I would tell people that the most important thing I've learned in all these years of trading is simply this. Do more of the things that have worked and try your darndest to do less of the things that aren't. They say adding to your winners and cutting your losers, that's what you're supposed to do. We keep it even simpler here in our office. Let's just try to do more of the things that have been working for us. Let's try our best to do less of the things that don't. If you do that in trading, and if you do that in your life, your life will be a whole lot better.
Mm-hmm. Lots of wisdom and humility from Dennis Gartman. And that wraps up today's MTA podcast. From Seattle, I'm Ed Carlson. You can follow me at seattletechnicaladvisors.com or contact me at ed@seattletechnicaladvisors.com. Send us your comments and suggestions. Let's keep our stops tight. Good day.